Professional traders know it's time to range trade. Traders analyze bearish and bullish rectangles to see changes in trend to know when to trade stocks and cryptocurrencies. A bull trend is formed when demand exceeds supply, and a bear trend occurs when sellers outperform buyers. When bulls and bears hold unmoved, it results in the formation of a trading range. Sometimes this leads to the formation of a rectangular pattern, which can also be described as a zone of consolidation or congestion. Rectangle pattern basics. A rectangle is formed when an asset forms at least two comparable peaks and two bottoms that are nearly at the same level. Two parallel lines can be used to connect the high and low points, forming a rectangular line of resistance and support. Bullish rectangle pattern. As shown above, the asset is in an uptrend, but after the rally, some bulls took profits and this created the first reaction high. Bearish rectangle pattern. As shown in the example above, the asset is in a downtrend, but when the price reaches a level that traders consider undervalued, the deep buyers absorb the supply and form a reaction low. Bullish rectangle pattern. Bullish rectangular pattern. As shown above, the asset is in an uptrend, but after the rally, some bulls took profits, and this created the first reaction high. After the price corrected, some of the downside buyers jumped and held the decline, which formed the first true. Bearish rectangle pattern. Bearish rectangular pattern, as shown in the example above. The asset is in a downtrend, but when the price reaches a level that traders consider undervalued, the deep buyers absorb the supply and form a reaction low. Bullish continuation rectangle pattern. Theta was already in an uptrend before hitting resistance near $0.80 on September 30, 2020. Theta USDT daily chart. To achieve the aim of the breakout target of the rectangular pattern, calculate the height of the rectangle. In the above case, the high is $0.25. LTC USDT daily chart. The target after the breakdown of the bearish rectangle is calculated by subtracting the height of the rectangle from the breakdown point.